Today, we're looking at Tempus AI, ticker TEM. And wow, this stock has delivered some serious alpha. We're talking, what, 164.5% gain over the last 12 months? That's massively outpacing the S&P 500. Hard to ignore.
It really is. And, the narrative is shifting. Our goal today is to dig into why. Tempus seems to be moving past that purely speculative story stock phase, the AI dream. Now it looks much more like a high-growth execution stock. The financials are starting to really back it up.
Okay, execution. Let's start with the basics then. We know Tempus is in precision medicine, but are they still mostly just selling genomic tests, or is this data company idea really showing up in the business model now?
That's the core question, right?
Yeah.
They basically operate in two parts that feed each other. You got genomics, that's the testing, analyzing tumors, blood, etc. That drives the volume. But the real value, the high margin part, is data and services, licensing data insights to biopharma. That segment had, get this, a 72.7% margin in Q2 2025.
72%? Wow. Okay, so the tests are kind of the data acquisition engine.
Exactly. And the high margin data sales. That funds the whole platform development. It's a flywheel.
That margin definitely screams software or data business, not just diagnostics. So this virtuous cycle you mentioned, how does the testing actually fuel that growth?
Well, every single test generates unique, really high quality data. This data trains their AI models, makes them better, which in turn makes the data licensing more valuable, almost indispensable to their partners. And we just saw proof of this really kicking into gear. Q2 2025 revenue jumped 89.6% year over year. Huge acceleration.
Right, that Q2 number was a big signal. And then there was the Page acquisition. What did that bring to the table immediately?
Page was a really strategic move. It instantly added a whole new dimension to their data moat. Their moat is built on this proprietary multimodal data, which just means different types of data combined. We're talking over 350 petabytes. It's a massive amount of clinical info, molecular data, and now, thanks to Page, digital pathology images. Crucially, it's all linked.
Linked data. So connecting the genomic sequence to the doctor's notes in the EHR and the actual image of the tissue slide.
Precisely. That linkage is the secret sauce. It's the raw material for really sophisticated AI that competitors just can't easily copy.
That sounds like a powerful technical advantage, but data's only useful if it's integrated, right? Are they actually embedded in the workflow? Are there switching costs?
Oh, definitely. They're deeply integrated. Tempus is connected to something like 65% of U.S. academic medical centers, and maybe even more importantly, 95% of the top oncology pharma companies. So they're not just selling a test here and there. The goal is to become the essential data operating system for precision medicine, that deep integration. It creates real stickiness, high switching costs.
Got it. The operating system angle. Okay, let's pivot to the financials. If the execution story holds water, what's the key financial inflection point we should be looking for?
Well, first, look at the operating leverage showing up. Gross margin improved significantly, hit 62.0% in Q2 25. That's strong. But the moment that really de-risks the investment case, I think, is the guidance. Management guided for positive adjusted EBITDA, about $5 million for the full fiscal year 2025. Achieving positive adjusted EBITDA, which reflects core operational profit, signals they're becoming a self-sustaining business. That's a major milestone.
Okay, major milestone. But we have to talk risks. The valuation isn't cheap. I've seen it cited around 14 times trailing revenues. That's steep. And the competition is fierce, right? You have specialists like Guardant Health and Liquid Biopsy, Foundation Medicine backed by Roche.
Those are absolutely real risks, no question. The valuation demands execution. But Tempus is playing a slightly different game, you could argue. It's broader than just one type of test. Look at the recent collaboration. They announced a $200 million deal with AstraZeneca and Pathos AI. They're working together to build a foundational AI model specifically for oncology. That points to the future.
Ah, so it's less about competing on this test versus that test and more about becoming the underlying platform.
Exactly. That collaboration shows how they can monetize the platform itself, moving beyond just diagnostics. They want to provide the core AI infrastructure for drug discovery and development, too.
So putting it all together, our analysis points towards that compounding advantage. The data moat, the integration, the accelerating financials justifying that premium valuation. It feels like that platform strategy is what underpins a path towards, say, a $130 price target in the next year or so.
I think that's a reasonable view. And the final thought for you, the listener, is maybe to consider the long game here. What happens when Tempus is less about selling tests and more about being the indispensable clinical decision support partner? Imagine AI tools, like their David Copilot concept, embedded right in the doctor's workflow, guiding treatment using all that linked real-time data. that future vision, becoming that essential AI partner. That's why this platform feels fundamentally different from your standard diagnostics company.